Okay, so good morning. Mitch, can you tell us a little bit about who you are and about your fund?
Yeah, sure. I'm Mitch Kleinhandler. I'm a managing partner at Differential Ventures. I've been doing VC investing for 6 years. Differential is a seed fund. We're based in Manhattan, and we focus on enterprise technology companies, typically centered around data, AI, machine learning. I have two partners. One of them, David, has his PhD in computer science from Stanford, and that's where we get really our hardcore tech expertise.
Mhm.
And my second partner, Nick, is very focused on go-to-market, product, sales. He spent 20 years in the software business, anything from pre-seed to post-IPO. I'm more of an entrepreneur. Prior to doing VC investing, I founded 10 companies in the US, Europe, lived in Europe a bunch of times. So I'm more entrepreneurial, and that typically is my focus. Write checks of 250 to a million, and then we do follow on to hopefully Series A and Series B companies. We have 13 companies in our portfolio. 11 of them are announced deals. 5 of them happen to be Israeli companies.
Wow,
That's
that's great.
probably more by happenstance than anything else, but we love Israeli tech.
Well, that's great to hear. So, with an entrepreneurial background and someone who's lived in Europe and is investing in companies that are not all entirely on the island of Manhattan, it sounds like traditionally you spend a lot of time flying. You and your partner spend a lot of time flying and moving and going from place to place. How has the coronavirus shutdowns or changes in behavior affected the way that you're working? How does your day-to-day look different today than it did just 2 quarters ago?
Well, I think first off, we have 4 people in our firm. Everybody's working from home, which is a major change for us. I would go into the office every day. Nick would be there. Our analyst would be there. So just not having that in-person interaction, I think, is a negative.
Mhm.
On the other hand, being a VC and investing, we principally focus on the East Coast of the United States, Canada, and Israel. So, it's interesting because I look back January, February, and March, we all did this, and 50% of our meetings were on Zoom
Wow.
or some sort of conference. Now it's obviously 100%. So I think everybody has that dynamic of not having personal interaction, which I think is a negative. On the other hand, it's something that we were conditioned to, and I think most VCs are typically conditioned to that. So in our deal flow, we end up, since we never will do a deal without meeting a founder, and we prefer to have more than one meeting with a founder and his team. Well, that obviously we can't do today unless it's a New York-based firm. So we tend to have a lot more meetings than we
Mhm.
typically would have, and the process is kind of like extended for us to do deals. And in some cases, we've talked ourselves out of doing a deal uh, because we just had, I guess, it's just taken us longer, and maybe we're not as excited about the deal as we go forward. So I think that's one change. The other change is, obviously, I usually go to Israel 2 or 3 times a year. My partner David is there 2 or 3 times a year. And some of that's prospecting to meet other VCs, but it's
Mhm.
also there to go to accelerators or to like a SOSA,
Right.
or meet potential portfolio companies. So I think that's a major negative for us
Mhm.
in our deal sourcing and deal flow.
Are you getting comfortable with the idea of making actual decisions and signing term sheets with companies that you don't get the chance to meet face to face, or is that still something you're trying to work through or think through?
No, I think we're very comfortable with that now.
Yeah.
And we typically also, if we're doing an Israeli deal, we've done, actually we just closed 2 that are not announced yet.
Hmm.
They were with VCs who we have longstanding relationships, Israeli VCs.
Yeah.
So we rely on them a lot more to give us the input that we need.
That's great. So seed funds by nature tend to be close to their entrepreneurs or to their CEOs. CEOs tend to be quite close to early stage, to their earliest investors in that respect. What are you hearing from founders, from people who have just raised sort of the initial capital for their company and are now trying to steer the ship through some pretty choppy waters? What are you hearing from your CEOs, your portfolio?
Well, one of the things we're hearing is that, we do enterprise tech, is that the sales cycle is a lot longer in closing deals. And in some cases, the sales cycle has basically stopped because a lot of the companies they're particularly going after may have other issues. And then also the whole decision-making process, it's now decentralized. And they can't get in front of these people one-on-one. It's just taking a lot longer to get transactions done.
And so what's your advice for either your portfolio founders or other founders who are launching their companies and now have to get in front of new customers or to try to build a customer pipeline or even to build relationship with potential investors? What's your advice now that people are sort of stuck at home and connecting by Zoom? How do you build relationships either with customers or with investors during this period of time?
You run a VC fund, you're an entrepreneur. So what do? We reach out to other VCs. We reach out to potential portfolio companies, our network of corporates, and we try to schedule as many. I think, let's assume I have 4 calls a day, so that's 20 a week. I try to get at least 1/3 of them to my network of VCs and corporates. So I think that any entrepreneur should do the same thing, reaching out via Zoom or email and try to schedule as many calls as you can with potential customers or other VCs that you might be looking at. Or I would also tell them to build a network of other entrepreneurs and reach out to them because a lot of them have common problems. So for instance, at Differential, we formed a group with 5 other VC funds where all the entrepreneurs are invited to a roundtable. Which is either Skype, Zoom, Slack, and it's basically run by an independent person. The VCs take no part in it, and all the entrepreneurs and the founders can interact with each other. And we found that to be really, really successful. So as a VC, I would encourage them to do something like that.
Really to use this time to build relationships with other entrepreneurs and with other founders in order to help them.
I think that's important. And then you have to, maybe you should do more content marketing than you're doing to help build your sales funnel. Maybe go back to some of the basic kind of like run and tackle. I would use a football example of football. Go back to the basics and figure out how you can build your sales funnel up.
So last question, what types of companies are exciting to you now as we're sort of, I don't know if the end is near, but seeing the beginnings perhaps of an economic recovery or trying to build towards that economic recovery? What's exciting to you in the enterprise software space? What are you looking for that's getting you excited and out of bed in the morning?
Well, we're kind of focused. Our thesis is really hardcore AI, data, machine learning. So we invest in 2 kinds of companies, and we're continuing with that regardless. And we're seed. So if I was a growth investor, I might think differently. But we assume over the next 12 to 18 months, things will get back to a sustainable new normal. So we invest in software companies that really have hardcore AI machine learning. And so that's one of our focuses. The other focus, which I don't think is really impacted by what's going on, is what we call the plumbing of AI and machine learning. So basically, it's technology that enables the use of AI and machine learning. So
Okay.
part of that thesis is that as AI and machine learning become more prevalent in the tech stack of any company, our companies help enable that. So we see growth in that regardless of where the economy is. So that's a little bit different than a consumer bent or software companies who are more focused on productivity or the workforce. So I think most of our companies are insulated from that, at least in the short term, which I would consider to be 12 to 18 months.
So as someone who's actually been sort of on both sides of the table as an entrepreneur and today as an investor, what's your advice to someone who's considering launching their company during this period of time? Do they go for it? Do they sit this one out? How do you sort of, what's the passion telling
Oh,
you
I think,
that they
I
should do?
think they go for it. I
Go
once
for it?
gave I once went through a talk where I went through economic disruption since 1979, and uh, I tracked 6 or 7 of them, and I launched companies right as 3 of them had occurred. I mean, I remember once I was in my lawyer's office. I don't remember what it was, like a stock market crash,
Mm-hmm.
and I was just going out to do a financing. So they said to me, well, maybe Mitchell, you should wait. I said, no, I can't wait. I need to do this. So I just focused a little bit differently. I knew it was going to take me a much longer time. And I guess capital efficiency and how much money you spend, you should probably, throttle that back. But if you think you have a good idea, a good business plan, I think you go for it. And I think sometimes it's better to do it in periods like this. And I think there's actually been studies showing that companies have started after something like this happens, they end up being more successful. So entrepreneurship, whether you're starting a VC fund, our fund is
Okay.
relatively new, or a new company, I say go for it.
This is great. If you've got the passion, you've got the right idea, this is the right time to go. Thank you,
Yeah,
Mitchell. We really appreciate your thoughts today.
great. Thank you very much.
Thanks
Nice
a lot.
talking to you.
You too.